working in the oil patch since 2008 as both a landsman and an attorney. He has worked on oil and gas matters in multiple jurisdictions and plays across North America. He received his undergraduate degree in engineering from Texas A&M and his JD from the University of Houston Law Center. Chris is a member of College of the State Bar of Texas, the State Bar of Texas Oil, Gas, and Energy Resources Law Section, the Houston Bar Association, Oil, Gas, and Mineral Law Section, the American Association of Petroleum Landsmen, and the Houston Association of Petroleum Landsmen. As in-house landsman for Sanchez Oil and Gas, Chris is here today to help us learn how to be paid timely and accurately for our royalties. Chris.
Thank you. Again, my name's Chris. I'm an attorney and a landman. I don't know how landsman got in there, but it's normally landman for Sanchez Oil and Gas. And I just want to start out with a question to all of you guys is, if your minerals, if they're in Mississippi, could I see a raise of hands if your minerals are in Mississippi, okay? And if your minerals would be in Louisiana, can I see a raise of hands? Okay, well or both, yeah. Well, I just asked that because the presentation is, most of Sanchez's activity so far has been in Mississippi. We do have a significant position in Louisiana, but we've been focusing on Mississippi first. So the presentation is going to be tailored kind of to Mississippi. A lot of the concepts apply equally to Louisiana, but when I talk about unitization, that's going to be mainly Mississippi. And another just upfront statement I want to make is I am an attorney for Sanchez and I do represent them. Although I'm giving you guys very general or giving a general discussion on royalty payments, you all should seek your own representation when it comes to your mineral interests and your leases and getting paid. But I think the concepts I present here would be helpful either way you look at it. So the way I want to get to this, the royalty calculations we're going to cover at the end and how you get paid, but I kind of want to put everything into a broad discussion of how we get to actually drilling and producing and payment of royalties. So I want to go through from kind of prospect to actual production in different phases. And I've broken these phases down into defining a project area. We'll do some preliminary title research and lease. Then we're going to go in and survey a unit, get a permit, do some detailed title research, drill and complete the well, and then go through what's called the division order process, and then finally issue revenue checks. So starting out in phase one, some oil and gas executives and geologists are going to get together and figure out an area where they want to invest money, where it's likely that from drilling we're going to find oil and gas or hydrocarbons. So in this case for the TMS, there was drilling in the 80s that lower Tuscaloosa drilling that they drilled through the Tuscaloosa Marine Shale and found out it had some potential. But at that point in time, we didn't have horizontal drilling and hydraulic fracturing. So, after the advent of that, people started looking at this again and said, well, let's go in there and take a look. So after phase one, we have an area defined. We'll move into phase two, and that would be doing some title research and leasing. And what we do when we do that, we'll hire brokers out in the field. For Sanchez and the TMS, we use F-Oil Properties out of Tylertown. We hired them to go out and check the county records for who owns the minerals and see if they're leased or not in our project area, and then go out and actually contact those individuals such as yourselves and negotiate leases for us. So after we've done some leasing, we're going to go into phase three, getting closer to drilling. First, we're going to get the we'll look at an area and say, well, we have a good amount of leases here, and it does look to be highly prospective for oil and gas. It's where we want to drill. So we'll hire a surveyor to do a unit survey. And the unit survey Here, this is the unit survey for our first well we drilled in the TMS, the Dry Fork East number 2H. Mr. Pat Martin with Engineering Services in Jackson put this together for us, but the unit survey is going to be the basic outline you can see in red of the unit boundaries. And then it'll depict on there where, oh, I guess I can't point at the TV with a laser pointer. It's just reflecting. But it's going to, the unit survey is going to show you where the surface location of the well is going to be, the point of penetration, or it says pop up there, where the well is going to go into the Tuscaloosa Marine Shale, and then where it's going to end up, the bottom hole location down at the bottom of the unit. So it's just a representation of the unit, where we think the well is going to be. After we get our unit survey, and I'll say another thing, that these phases, I've broken them up into kind of this, they're happening one after the other. But in a lot of circumstances, they're happening simultaneously. We're getting leasing done at the same time we're getting unit surveys done. We'll start to do detailed title research normally when we decide where we want to drill. So a lot of this stuff may happen at the same time, but just for description purposes, I've broken it up like this. But we'll have a survey done, and then we'll start to do detailed title research. And we'll do title research on every tract of the unit. And although this survey, it shows, this 1,945 acres is just being those 3 sections, there's going to be, a couple dozen tracts in there that have different ownership. So we do detailed title research on each of those tracts. Who owns the surface, who owns all the minerals, who owns any non-participating royalty in those tracts. And then once we have those, so each tract that has differing mineral ownership will compile what's called an abstract, and it's a copy of all the documents in the county courthouse. And we put those abstracts together and mail them off to our title attorney. Stan Ingram, who's presenting right now in the other room, is actually our title attorney in Mississippi. But he'll take those abstracts and give us an opinion who actually owns the minerals in those tracts, and if there are any defects in title, what those defects are, and what we can do to cure those defects. And I don't know how familiar you guys are with title defects, but a title defect might be something like you had a mortgage on the property in the 50s, and that mortgage was never released. Even though so much time has gone by, most likely that mortgage doesn't burden the land anymore. So a title defect, the title attorney will say, there's an unreleased lien on this property, get a release. So once we get those title opinions on all those tracts, the field landmen, they go out and they start to cure these things, go to the banks, get releases of liens, find probate instruments that are filed, across the country. Get those so that we can verify who actually owns the minerals and who needs to be paid when we do have production. After we get our unit survey, we've started to do detailed title research. The title opinions are in progress. We need to get a permit so we can drill on that unit. In Mississippi, part of the permitting process, we can get a unit created by forced integration. I know a lot of y'all have probably heard about this, but it allows you to create a pooled area of mineral interests where you don't have some of the people leased. And so in order to do that, under statute, we send out these good faith 3-choice letters to unleased owners that have 3 options to lease, participate, or farm out. And we also publish notice of our permit hearing in a local newspaper. I get a subscription to the Southern Herald and the Wilkinson, or the Woodville Republican. And you can see all the notices in there from the different operators. But I've given y'all an example of a good faith 3-choice letter that we sent out. This is on our Hiram unit that is in northeast Wilkinson County, but it has the 3 options. First, agree to participate, agree to farm out, or agree to lease. It's going to set some terms in there, what we consider to be a reasonable term for those different options. Agree to participate is and these options may not apply to you. It just depends on what you've done with your minerals by the time you get this letter. If you've already leased and you get this letter, it was just an oversight of our part or a timing issue where your lease may not have been recorded. So when we got your name from the county records, we didn't see that lease, so we think you're unleased, although you may have leased to another operator and they just haven't recorded it yet. And so these options may not always apply to you, but there's always going to be these three options. And what are they? Well, an agreement to participate is if you're a mineral interest owner or you're another operator in our unit, say Halcon took leases in our unit, the agree to participate is, well, I'm going to participate in the cost of drilling your well, and I'll get my proportionate share of the production. And I'll also bear the risk if that well doesn't pay out. I've paid for the well, but I'm just bearing the risk that if there isn't any production. So that's one option. Agree to farm out is if you are another operator that's taken leases in that area, you're agreeing that upon the production of oil and gas from that unit, you'll assign the leases to us in exchange for an amount of money and overriding royalties. So that agree to farm out is if you're a leasehold owner, not a mineral owner, and not someone that owns royalties. But if you are a mineral owner that's unleased, that third option, agree to lease, is also an option for you. Another option is for you just to do nothing. And if you do that, you're subject to the non-consent penalty under Mississippi statutes, which is 250% of after payout. So the three choice letter, and also include the plat that I showed you guys earlier that we have a surveyor do. This is for the Hiram unit in northeast Wilkinson County. It also has this sheet that has the different options. Whatever you want to do, you select it and sign it and mail it back. It also has this authorization for expenditure attached to it. And what this is just a very detailed list for people that are considering the agreement to participate, what we expect, our estimate of the cost to drill this well, and this one is around $15,700,000 to drill. So if you owned a portion of the minerals and you were thinking about participating, you could calculate how much you need to pay to participate in that well. So once we send out our good faith letters, normally we send those out about 2 months in advance of the hearing. We go to the hearing. If all goes well, the unit gets approved. The hearings are the third Wednesday of every month in Jackson. They're open to the public, so if you have any concerns, you're welcome to come. If you're going to dispute the unit, there is a 1 week pre-hearing deadline that you have to say, I'm going to contest that unit, and you have to get your complaint in. And I recommend to everybody if you're going to contest a unit, find representation, find legal representation before you show up at the board, or else the board is just going to rule for the operator. So keep that in mind. But if no one contests the unit, the permit to drill is issued by the Oil and Gas Board. We go out there and we drill, complete the well, and hopefully it starts to produce oil and gas. Then we move into the fourth phase, which I call the division order phase, or division order process. And what this is, we had the attorney prepare drilling title opinions on each tract in the unit. And those title opinions say who owns the minerals in all those units. This is another process that the attorney goes through, and he takes all those title opinions in the unit and determines all those title opinions covering all those tracts, and determines what their contribution is to the unit. So how does it all add up? What is their proportionate share of the unit? The division order title opinion also takes into consideration non-participating royalty owners, overriding royalty owners, and the other operators or working interest owners in the unit. So it's a complete list of ownership that adds up to 100%. who's gonna get what out of every barrel that comes out of the ground. And it includes, what's most interesting to you guys and probably why y'all wanted to hear me talk, and I've gotten to this point, it includes unit royalty calculations for each owner or lessor in the unit. So how do you calculate what your royalty is in the unit? I know you all, if you sign a lease, the lease is gonna have a royalty in there, whether it's 3/16 or 1/5. But in order to calculate what you have in the unit, it's not 1/5 in the unit unless your tract covers the whole unit, and if it does, kudos to you guys. That's gonna be very good for you. But your tract may only contribute a portion of that unit. So what do you need to calculate what you're supposed to be paid on the whole unit? Well, you need to know what fraction or percentage of the minerals you own under your own tract. Maybe you own half the minerals under your own tract, or you own, 12/256 or 6/356. It could be any fraction. You need to know what that is. You need to know, and you can find that out by doing research on your tract in the county courthouse or hiring someone to do that research for you. You need to know what your royalty interest is in your lease. When you sign the lease, did you sign it for 1/5 royalty on oil and gas, or 3/16, or whatever royalty you signed up for? You need to know how many acres your tract contributes to the unit and the total acreage in the unit. You find the total acreage in the unit off of the unit plats that I showed you earlier, that came in your good faith letter, or the public records at the Oil and Gas Board. I think you can find them on their website through the permits that are issued. So then you have all this information. How do you calculate it? Well, the formula is that you find how many acres your tract contributes to the unit divided by the total acres in the unit. And that's your tract factor. It's also called the participation factor, or your proportionate acreage factor. Once you have that number, then to calculate your royalty, it's just your mineral ownership in the tract. So say you own half the minerals, times the lease royalty, say you signed up for a 1/5, times the tract factor. And that gives you the royalty you're gonna be paid on every barrel or MCF of gas that comes out of that unit. So I put some examples together. And
How many decimal points do you go out on that?
We go out to 8 decimal points. That's normally, most operators do that. I wrote title opinions for 4 years, and every title opinion I had, we went out to 8 decimal units. That's pretty much standard practice. So, but this example, say you own a 40-acre tract, but in the unit, only 10 of your acres are in this 2,000-acre unit. We're going to call it the Wilkinson TMS. Say it's like that. Can everybody see that? Yeah. All right. So you know that you own half of the minerals in that tract, and you signed the lease for a 1/5 royalty under that tract to Sanchez, and we're operating this unit. Well, your tract factor is just going to be your 10 acres that contribute to the unit divided by the entire unit acreage. So 10 over 2,000. So that's your tract factor. And then to get your unit royalty, what you're paid on the production out of this unit, you just take your tract factor, you multiply it by your lease royalty, and you multiply it by, or I did this a little backwards, by your fraction of the minerals you own, and that gives you what your unit royalty is, what you'll be paid on production from that unit. Now this uses very round numbers. Normally the numbers are going to be something like this. It's a little bit more challenging, and we'll give you a different decimal. And I gave this example. Say you own 2.563 acres in a tract, and only 1.254 contributed to it, and you own 12,256 of the minerals under your 2.563 acre tract, and you sign a lease for 3/16. So it's the same formula. You just take the acreage your tract contributes to the unit, divide it by the unit acreage, multiply it by your mineral interest in the tract and your royalty, and that will give you your unit royalty. So after the division order title opinion has been written and delivered to Sanchez, we check the numbers, make sure everything adds up to 100% or 1, and then we issue division orders. And a division order is not any sort of conveyance. You're not giving up your minerals. You're not warranting what it says on the division order. It's just a document that's delivered to royalty owners and says, this is what we came up with through our examination of the deed records in the courthouse and any curative we did, and this is what you're going to be paid on. It's your opportunity then to say, I agree or I don't agree with this. And division orders, they can be revoked at any time. So if down the line you find out you don't agree with it, you can go back to the operator and say, I don't agree with it. But it is not going to be as easy then to make an argument that you don't agree with it as it is when you initially get those division orders. And Burnell asked me to talk about fair and timely royalty payments. Well, the fair part would be the calculation I just showed you. Know how to calculate your royalty. And the timely part is going to be this division order process. The quicker you get your division order and bring up any arguments you have on why it's incorrect, the quicker you're going to get paid. Because you're not the only one in this unit. There's going to be a bunch of royalty owners, there's going to be a bunch of operators in this unit, a bunch of overriding royalty owners, and all of them are at the same time getting their division orders and reviewing that. And the quicker we get all of that settled, who owns what, the quicker you're going to get paid. Because we got to reconcile it. If you feel like you actually are owed more and your calculation's different, then it's got to come from somewhere. Because that division order title opinion added up to 100%, and we got to figure out where it's coming from. So if you agree with what's on the division order, or you get it resolved, any disagreement you have, you just sign the division order and return it to Sanchez, and you return a W-9 if needed. That's the IRS form. We're getting paid on royalties. Normally when you lease, the lease broker, in our case, F-Oil Properties, they should have had you sign the W-9 when they gave you the lease. But sometimes we don't have it, so it may come with your division order. I've included here the division order, or a sample of the division order. And it has a bunch of legal verbiage in there, but like I said, it's not warranting anything. It's just setting forth what we calculated you own. And the main thing I want to point out there is it's going to have that formula we just went through. It's going to have your mineral interest in your tract. In this case, it's 0.75. It's going to have your royalty that you signed for. In this case, it's 3/16 or 0.1875. And it's going to have your tract factor. This case, it's 200 acres out of a 2,000 acre unit, and it gives you your royalty interest in that unit. So you review the division order. If you agree with it, you sign and send it back. This is a W-9, pretty. It's a standard form, fairly straightforward. If you're an individual that owns the minerals or royalties, you just sign your name, address, social security number, sign and date. So after the division order process, what comes next? And well, that's what we're all waiting for is getting payment. Once we get the division order, we'll issue a revenue check. And you should review your first check and confirm that everything's correct. We'll send checks monthly, and they're based on the production from that prior month or a monthly minimum. Sometimes we won't pay unless you've accrued $25. And so if you have a very small royalty interest, it may take a couple months to get up to that $25 before we cut a check. But maybe some of you will never have this problem. But here's a sample of the check. You know, the check attached to it will have a detailed check stub. The check, you know, it's like any other check, can have your owner number, which is unique to you in Sanchez. It's going to have a check number, a check date, the amount, the date, and then, but on the check stub, this is where all the really interesting information is. It's going to have the production date, and that's over there by that S. Maybe I can do it. Can you see that? No. It's going to have the production date over here with all these dates of when the actual production was sold. It's going to have a production code, which is down here. It's going to say oil, gas, plant products, or condensate. These are all just different hydrocarbons we sell and have different values. That's why they're broken out differently, to show you the different calculations. A BTU factor is going to be here, and that's going to be on your gas products. A BTU factor is just how it's a factor, a scientific factor of how much energy is needed to heat, you know, so much water by 1 degree. The higher the BTU factor, the more valuable the gas, and so you'll see that on here as well. And then you'll see the type of interest you have, whether it's a royalty interest, override, a working interest. I think for most of y'all it's going to be a royalty interest, your mineral owners that signed a lease. The working interest is usually another operator, Halcon or Goodrich or Encana. And overrides, if you're lucky enough to have one, it'll state that. It'll give you the price of the product that we sold. So, you know, if it's oil, it's going to be the Louisiana light sweet price per barrel. It'll have a price for gas per MCF. It'll have the gross volume produced from your property here in this column here. So it'll tell you how many barrels were produced in that previous month, or how many MCF of gas were produced from your property in the past month. And it'll have a gross value, which is the price times the gross volume. It'll have gross deductions, and the deductions, this is a sample of a Texas check, and Texas is going to have its severance tax and a regulatory fee. I don't know if there's a regulatory fee in Mississippi, but you definitely have a severance tax. So you're going to see how much severance tax is taken out of the overall production, and then later on you'll see in 17 owner deductions what's your proportionate share of that severance tax, because everybody has to pay that severance tax. That tax isn't your income tax though, and I'm no tax expert. There's some other people here today that'll talk to you about that, but it doesn't include your state or federal income tax that you have to pay separately, so you should take that into consideration. But it'll sum everything up at the bottom with your total interest. It has a property number up here, and also if you're lucky enough to be in multiple Sanchez units, you'd have the same information for each unit that you're in, so you can see the production that's attributable to each unit, and varying by that property number. Property name is most likely going to be the unit name in whatever state and county it's in, and any amount being withheld and deduct. That's usually a gas balancing. We initially aren't going to have gas production from the TMS because the pipeline infrastructure isn't there. We're flaring a lot of gas. So you're not going to see this deduct. Initially, if you ever do see it, it is when we sell, we have a contract to sell a certain amount of gas to a pipeline company, and maybe we don't meet that amount, but we still get the proceeds from it, but later on we have to make that up. Well, we may pay you based on the contract amount, but later on when we have to make up the production, you see a deduction from your check. Now, I just perused the different operators' websites and got the royalty relations information for the different ones. For us, That's our email if you have any questions about the royalties. And I'll ask Mr. McGee if he can post this presentation on the website so y'all can also have this. But you know, this is the first line of people to contact if you have a problem with any payment or your division order. The first line of people to talk to about your problem. You know, if they're not getting back to you, then you know maybe it's you seek representation to get to their attention. But definitely call the Royalty Relations Department first. It may save you a lot of money, time, and headache. And a lot of these people are helpful. So that is it. You know, like I said, the fair part is what I showed y'all how to calculate what your interest is in a unit, and the timely part being, you know, once you get the division orders, make sure you review those. If you have any problems with them, get in touch with the operator quickly to get those problems resolved, so that you can get paid more quickly and get those issues resolved. One thing I also want to say that I didn't put in this presentation, when I'm talking about these royalty calculations and your mineral interest, what this doesn't take into consideration is say you own, you know, in this case it was half of the minerals under your 40-acre tract. If your tract is burdened by non-participating royalty interests, I don't know if all of y'all know what that is, but let's say back in time your property was owned by A, conveyed it to B, B conveys it to C, and C conveys it to you. And you know you have half of the minerals because in the deed from C to U, C reserved half of the minerals. So you got half and C kept half. Well, back in here, in these deeds, there may have been a conveyance, let's just say from B to C, where B said, I'm reserving a non-participating royalty interest equal to 1/16 of the royalty. So B is reserving 1/16 of all royalty. So even though you own 1/2 of the minerals, this 1/16 has to be accounted for. And it's going to burden C's 1/2 and your 1/2. He's going to be burdened by 1/2 of that 1/16 NPRI. And you'll be burdened by 1/2 of that 1/16 NPRI. And the way you get your unit or your unit royalty, you're going to have to deduct that 1/16 or 1/2 of 1/16 times your tract factor. Because B has to be paid his non-participating royalty interest. We don't need B to sign a lease. But he needs to be paid, and it comes from C and U. So when you're calculating your unit royalty, you need to be aware of any non-participating royalty interests that are in your chain of title. This being your chain of title, those would make sense.
Chris, can I ask a question?
Sure.
He's got to be paid that 1/16. Is that paid by Sanchez or Encana, or does it C and?
It comes out of your royalty.
But what I'm thinking about is for tax reasons, you know, that 1/16's got to be accounted for
Yeah.
taxes by someone.
In the division order title opinion, the title attorney lists out all the non-participating royalty interests. So we know about them, and we will be paying them directly.
So the burden is not on C or the president.
Right, you don't have to cut a check to pay them. We'll be paying those NPRI, and they'll get a division order too.
In the case where there's a side agreement between either C and an attorney or you and an attorney for a 1/16 payment.
If it's not recorded, then we don't. If it's recorded and if we
You
picked
guys
it up
pick up
in
on
the
that?
division order title opinion, then we'll account for it and pay that person their respective share. Any other questions? Sure.
What's the accuracy of your, on the division orders, the actual plot? Is there ever a survey done, a physical survey, or is it just looking at a plot map and guesstimating
You mean for the tract contribution?
Right.
What we do is we look at the acreage as it's been described in the chain of title. As A gave it to B, B gave it to C, there's an acreage call out there. And if we can get all the tract factors to add up to what the surveyor called out, the entire unit acreage, then we're not going to do a survey on all those individual tracts. But if there is a question on the acreage, then we may go in and survey those individual tracts to determine the tract factor. And then, you know, the way you're gonna know that is when you get your division order, if that tract factor number there, if that denominator on that fraction differs from what you think your acreage is, then that would be your key to, hey, I think it's good.
But looking at a plot plan, you know, on the portion of it like you described there, it's kind of hard to tell what acreage is in your rough map here.
Right. Right, and we rely on the attorneys to figure that out. What is the contribution? And if he can't figure it out, he's gonna put a requirement in there for us to go and get a survey.
I've got property that's in 3 different sections, and I know in that case, they have come out and reshot through GPS or whatever, all of those lines, but for that very reason that you're talking about. And talking to the guys that do it, they say it's amazing how close the old-timey method is to what they're coming up with now, so there's very little discrepancy.
Hey, you had a question?
I did. You may have said this and I may have dismissed it, but when you have to sign the division order, does everybody in the unit have to sign it before all of us, before anybody's paid? Or is it an individual thing where you sign it and then you're...
I don't think everyone has to sign it, but, you know, and I'm not in the land administration department or division order department. They take care of that, and I think they have a way of knowing, well, we've got this one portion settled, we're gonna go ahead and start issuing payment on that. And I was talking to Stan Ingram earlier. Mississippi does have a statute like Texas that if people aren't paid after 120 days after first production, there's a penalty imposed on the operator of interest on your production. So it's in our best interest to get all that stuff resolved, so we don't have to pay that interest.
What's the timely payment schedule for land use?
For land
It's
use,
just surface.
oh, normally we try and settle all of our surface damages before we get in there. So if your pad is on, if you own the surface and we're putting a pad there or putting a frac pond there, we try and settle those damages before we even get out there. And if you have an operator that's not doing that, I'd start pushing them now. Sure.
On that pad, agreement there, if you, have just a few acres under your minerals on your land, they want to put a well on your land. Now, in the agreement, they come out with, a bunch of things that they can do, and they put in that of housing oil field workers. Now, I know other contracts don't have that in it, but they're putting it in mine. But I don't want oil field workers housed on my property. What rights do I have there?
Well,
What I'm talking about, I know they have to have a house there to operate out to do the well.
right.
But I'm talking about permanent, stuff.
You know, I don't see a lot of operators, I don't think it's in their mind. It's definitely not in my mind that I'm gonna put permanent housing on your property under the oil and gas.
What I've got in
It's
mind-
normally covering just the drilling time.
Well, I understand that they have something like that. But with this thing busting wide open, and I've talked to several people, of course, now the county's putting up housing, individuals are putting up housing projects, and I hope this thing works out where they don't get stuck. But, I'm thinking that, for a temporary, say a year or two, they may wanna come in and put trailers up or something housing oil field workers, and that, it's not to me, it's an open-end thing. If I sign it open-ended, they say, well, you signed this and it says here oil field workers and this is an oil field worker saying this. What, you just
Well,
need-
we have, you know, the Eagleford is on fire, and that's the greatest example of, you know, those leases have that same wording in there. It's a holdover from the producer's 88 form, that language. But even in the Eagleford, they're not doing that. I mean, there are people building apartments and hotels in the Eagleford to house all the oil field workers. I don't think Sanchez does that anywhere in the Eagleford or anywhere else where we're building housing for our contractors, because we contract out a bunch of this, all the completions guys, all the drilling guys, it's all contracted out. We don't let them stay on the land after they're done doing what they're doing, they need to get out of there.
But
You know, maybe modify it to say, you know, temporary, and then say how long temporary is,
Yeah.
3 months or 4 months, rather than any extended amount of time.
because in our area, we're gonna have an influx, maybe double our population for a year or two here. Those people fix to leave. They're going to another area to go to work. They're not gonna be here. And, that's what I'm concerned about.
I don't think that it anticipates
Right.
what you envision, but
Okay.
if you can somehow draft language in there
Yeah.
to make it clear that you don't want any long-term stuff, that'd be in your best interest.
Right.
Sure.
What's the situation with being deducted for operating expenses from
It
your
depends.
royalties?
Sure, it depends on your lease, and I'm not entirely clear on that, but some processing costs may be deducted from your royalty. I don't know what they all are. You know,
So you
Normally, that's-
want in your lease to be paid on the gross
right,
amount, not on the net amount.
right, right. And, you know, normally, I think that's associated with natural gas and how they process the natural gas, and they have a lot of hydrogen sulfide or other contaminants, and they'll take that out, and you have to pay your share of the costs associated with processing that gas. But like I said, in the TMS, we're flaring all gas right now, so there aren't any processing costs.
I've read some things on some bad operators elsewhere in the country that's taking, you know, lots of money out.
But I'm sorry, I don't know
Yeah.
what those costs would be, but,
Another question, the terms of my particular lease says that they go into force when drilling operations begin, such as if you have a lease running up, if they start operations, you're now bound under that lease. What is the legal definition of,
yeah,
when does drilling operation begin?
sure.
Is
You
it when it's
need
flooded?
to, Stan Ingram's the guy to talk to on that. You know, it varies from state to state. I'm licensed in Texas. In Texas, you know, just actually, you have to actually be going out there and busting down trees and creating your pad or drilling. It depends on the circumstance. There's no statute in Texas that says this is what operations mean. A lot of, if you have a very detailed lease, it may actually define that, you know, operations means you're drilling hole. But if you don't have that in your lease, then they're gonna look to what the case law is in the state. I don't know what it is in Mississippi, but it just varies by the jurisdiction.
How many acres do you usually pay roughly for each pad? Like we're getting 2 on our property, and how is it figured out for damages?
Well, some leases the first question is how many acres does a pad take? And a pad, like our pads, they've been 5 acres, and then a frac pond that's like 4 acres. So you could have 10 acres just for one well, but the operator, may utilize that frac pond for the other well. So you may only use the surface pad of 5 acres there and 5 acres and 4 acres. So that's what we've been looking at. But as far as determining the damages, you look at what's set out in the lease. If your lease doesn't say, then it's gonna probably be the value of the timber that's on there, or, whatever purpose you're using it for. If you have the loss of rental income or hunting lease, that would be what I would use to calculate surface damages. And after we're done, those pads are gonna shrink. You don't need that much acreage after you've drilled your wells. And they don't take up that big of a footprint after you've gotten all your equipment out.
Yeah, we have an old well site that was about 5 acres, and it's still pretty much unusable, but they're not gonna be drilling that pad.
Okay. Well, that's about the size we've been using. If it gets into multi-pad drilling, those sizes can enlarge because you need space for each of those wells. Although you're leveraging some of the space. You don't need another 5 acres for each well, so then go like that.
Right.
But you do need some more space as you move those wells out.
Taxes still accrue to the owner of the land, don't they?
Yeah, I mean, you'll pay your own, you mean property taxes? Yeah, you pay your own property taxes.
I didn't get your pay, but then, in that light on which worth on surface damage too. Now, I've got a place that's got a subdivision beside my land. It's just a fence between us there. And right now, the real estate people tell me that I've got a big pond, 8 to 10 acre pond there, and that my land would be worth, if you subdivided it to build houses on it, where it's located with this subdivision, it could be worth, say, $20,000 an acre. Well, I bought 2.5 acres of this subdivision for $30,000. Now, when they come in, also tell me that if they put an oil well in, say, the center of this 40 acres, instead of being worth from $10,000 to $20,000 an acre, it's gonna be worth $2,000 to $3,000 an acre, because nobody wants to build right beside an oil tank. What kind of legal thing would I have to go to court to get some kind of adjustment there, or what is it?
I don't know, I mean, it just depends on what you can work out with the operator, but, I mean, take into consideration, what you paid for it is probably one factor to take into consideration, but as the operator, we can't say, well, any speculative value of this property is the value.
Which is really-
I may build a,
Real estate people
Manhattan
are telling me how much
skyscraper
it's
here.
worth. Real estate people are telling me how much it's worth now, and how much it's gonna be worth when that's approved, so can I get some real estate people to
Yeah.
verify that and see what comes out?
Unfortunately, I don't really know what Mississippi law says on valuing acreage for those purposes, but, like I said in the beginning, I'd suggest you get legal counsel to advise you on that and settling your circumstances.
Thank you.
Sure.
How long does it take to start getting your checks usually?
Well, like I was saying, there's a statute in Mississippi. We're hoping to get within the 3 months after production, because there's a statute that penalizes us if we don't. We have to start paying interest. So that's our hope, is 3 months. I mean, there may be extenuating circumstances, there may be a really big dispute on who owns what in there, and that may push it out. But that may just push it out between those people that are disputing.
Can you get it earlier than that, or?
It's possible, but the title out here, the number of people that own minerals in this unit make it a challenge to expedite that process.
If it takes a while, they're saving it for you, supposedly.
Right, yeah, it's accruing.
Does Sanchez require, you to sign the division order in order to receive payment?
Normally we do. I don't know, I'm not in the land administration department, so I don't know what their policies are. But it could be interpreted by them if you don't sign it that you're disputing. Why wouldn't you?
Well, because sometimes on the check stub, they don't, if you have multiple tracks within the unit, they don't separate it out. And it's really hard to know if your math is right or if we should be disputing it. We're not sure.
Well, sure, I mean, I'd just get in touch with them and say, hey, can you break it down on a track-by-track basis so
Okay.
I can see what, you know, the purpose of the division order process and signing a division order is to clear all that up.
Right.
Rather than wait down the line and say, hey, wait a second, you've been paying the wrong person, I'm supposed to get more. Because we've got to go back to that other person and say, you owe them all that money that
Exactly.
you improperly got. So we want to try and get it resolved though.
Chris, another question for you. What you're telling us is if you have one well in that unit, if you have multiple wells, are those all going to be separate checks?
No, it wouldn't be separate checks. You'd see the production increase, the gross production, but it wouldn't, you'd have one property number and that would be,
So everything would be together?
Yeah.
Kind of like what she's saying, it wouldn't be separated out if you're getting royalties from, originally from one well and then they drill 2, 3, 4 wells, those checks will all be lumped together in one payment?
yeah, it'd be the same track factor, same, you know, royalty interest, so it'd just be a different volume coming out. I think so. I'm not 100% on that, but I don't see why they would break it down on they may do that on a well-by-well basis.
No.
Could you get them to do that? You ask them to. You could ask them, they might say no.
You know, they might say no, but one way you can also check is we're required on a monthly basis to report to the oil and gas board what our production is from each different well. So you could always go there and see, the 1H is making this much, and the 2H is making that much.
You know, you're taking a 2,000 acre tract, you got the potential of as many as 16 wells on that tract to suck all the oil out of it.
Yeah.
One well certainly won't do it.
I agree with you. I think that, you need to develop that fully. And the plan is, as we have applied in our unit applications, to put multiple wells in there. But it is, the engineering has told us the proper way to develop this play is these large units. From a land impact, a surface impact perspective, the more we utilize pad drilling, the less surface impact we're gonna have. And the oil and gas board, for them to, one of their duties is to promote the development of the play. And this is one way they're doing it. This is one way they incentivize it.
I have 3 leases with Encana on the same tract of land. There'll be 2 wells that are gonna be drilled. Do I get paid on all 3 leases or just the last one?
So the leases, are they all, well, it could be multiple things. I mean, maybe they didn't pay you enough on the first lease and they've discovered you own more minerals, so they're now leasing you for more minerals. I don't know why you would get multiple leases
2
on.
of them are 2 years old, one of them was this past December.
And so none of them have expired. And all the royalties are the same? Well, that's a mistake. I don't know why they did that, but you have a lot of field landmen working out here. They may not have picked up on the lease in the courthouse, those prior leases, and thought you needed to be leased again. Hey, you took the bonus money, that's good for you. But that's not normal. That's not normal.
I think so.
It's all in one unit?
Yes, sir.
Oh, yeah.
Yes, the most
Well, they're different.
You did.
Are they all cut through?
And the one
Or are they
last
cut
year
solid?
was this additional land.
See, that's where you look,
mineral rights that they discovered.
Somebody come in, lease your shallow well.
Okay, well, yeah, I mean,
Somebody else.
well, hopefully what they're gonna do is drill
Well, they were top
before the
leases.
first lease
Huh?
expires.
Yeah, they are.
It just means they're.
Okay, then all your minerals would be covered,
Oh.
although they're covered by different leases.
Yeah.
Yeah.
Since the royalty is the
Oh,
same,
that's for
it's an
service.
easier calculation.
Right.
Otherwise,
Can
they
you
have
send
to
them
figure
right?
out how many
Right, right.
And the quad drilling, what is the quad drilling?
Pad drilling?
Quad.
I don't know what quad drilling is, but I mean, maybe that's 4 wells on one pad.
What is, Sanchez's, long-term plan in Salmon Parish, in Louisiana?
St. Helena, I think.
You have a swath through there.
Yeah, most of our acreage in Louisiana is either new leases, so they have a lot of term left on them, or they're held by production or continuous drilling. So on those leases, we have time. We have ways to create time. And the more time we get to figure out the play, the better. So right now, we don't have on the books plans to drill that.
On that map, do you know anything about that map?
I've seen it on the internet.
Oh, okay.
That's all I know.
So it must be true.
Yeah, it's gotta be true.
Like it has your well size, like it has, like your name and well size, and then it has a figure under it, like $1,893. You don't know what that figure is?
No idea.
Just wasn't.
Okay, fair enough, fair enough.
What's
Sure.
The 1/5 and 3/16 you're speaking of, is that on gross? On net?
That'd be on gross, and then your net is taken, I mean, whatever deductions there are taken out of that after.
When will Sanchez be adding, or are you, more drilling rigs? Are y'all just gonna keep the one moving around?
Right now, we just have one. We just finished our second well, drilling our second well. We're moving to our third well. We talked about the second rig, but we don't have contracts in place or anything like that. So right now, it's just one rig.
Come on.
Does it take approximately a month or what to drill a well?
Well, if you don't have any problems, it takes a little over a month. And, the goal of all the operators is to get that drilling time down even more because that makes it less expensive. But right now, it's around a month. If you have problems, if you lose pipe or something happens, it can easily go out to 45 days or 2 months. And that makes these wells really expensive. They're very deep wells and there's a lot of pressure, there's a lot of technical challenges. So they're not easy to drill.
Like you punch a hole in the ground and go.
No.
Like,
Well, thank you guys, and this is my email address. If y'all, that's the best way to get a hold of me. If you have any more questions.